Okay, today we are very happy to have the Executive Director of Kenanga Investor Berhad, Encik Abdul Razak Ahmad, to be with us to share about the vision and the future direction of the Kenanga and its company. So, Encik Abdul Razak, first can you just roughly let us know what is the background of the company and what are the funds that you all has been managing?
Okay, first of all, I would like to thank Phillip Mutual for inviting me to give some overview on the Kenanga Investors Berhad. Well, Kenanga Investor Berhad actually started off as CMS Trust Management Berhad, a wholly owned subsidiary of CMS, 79% subsidiary of CMS and 29% owned by National. So in April 2010, CMS decided to sell the CMS Trust Berhad to Kenanga Investment Bank, and with the sale, they also agree to Kenanga also agreed to transfer all its business under Kenanga Fund Management into the CMS Trust Management Berhad. All this exercise have been completed on November 1st, 2010, and with that we actually relaunched the CMS Trust Management Berhad as Kenanga Investor Berhad to reflect the ownership of Kenanga Investment Bank in Kenanga Investors.
So with the reborn and the transformations, so how will that impact the funds that has already been in the market, and what will be the direction for all these funds?
Okay, so one very important outcome from the business transfer is that at first we have to think how to merge the investment philosophy of both CMS Trust Management and Kenanga Fund Management. But after reviewing the both investment team capabilities, we actually found out that it is better to actually offer a platform of a multi-team, multi-style to the market. So what we have done is that we have now under Kenanga Investor Berhad two equity investment team that is formerly from Kenanga Fund Management and CMS Trust Berhad, because we saw that these two capabilities are unique and actually complement each other. So in terms of the continuity of the management of the unit trust fund from the previous two entities, it still continue as usual, so there is no disruption. But with these two capabilities, we can offer a more wider variety of option to our investors. Excuse me.
So, in fact, it is positive for the investor that they have more choices in terms of the fund manager style and all this through a single platform, right?
Yes.
So, with that, how will that affect your distributors, or how should the distributor able to leverage on your new rebirth of this new strategy?
Okay, I think with this rebirth of the new strategy, what we can offer to our distributor is that, because what we now embrace is the culture that we must understand what the clients want. Client need is paramount to us. So our intention now is to engage distributor like yourself, for example, Phillip Mutual, understand what Phillip Mutual clients want, and we can come up with the fund, or manage the fund to the way that that suit what the clients want. So this will actually help us to enhance our distributor ability to engage their client and offer a better variety of option in terms of their investments.
Okay, good. So in that context, looking ahead, do you have any plan to launch any new funds, especially in the Islamic space?
Okay, I think as we all know, it is the government intention to promote the Islamic capital market in Malaysia, and one of the thrust of the the recently launched Capital Market Master Plan 2, announced recently by the Prime Minister, is Islamic Capital Market. So yes, we do have intention to launch new funds, and what we are trying to look is that, especially in the area of what I call a Sharia-based product instead of a Sharia-compliant product to the market.
Okay, I think Sharia-based may be a little bit new concept to most of the people. Can you just please elaborate what is the difference between Sharia compliance and Sharia-based?
Well, if you notice, under the Islamic law, there is what I call concept. That's where product must come from, that we must comply with. So, for example, one of the tenets of the Islamic what I call law is that in terms of the concept is that it's like, for example, musyarakah. Musyarakah is where the manager and the investor actually shared same risk. So this is different from when you come out with the product. For example, okay, we have an equity product, we want to comply with the Sharia requirement, how to make it Sharia compliant. So when you the difference between the Sharia based and the Sharia compliant is in terms of you actually use the concept to come up with product instead of the product to comply with the Sharia requirement.
So in this context, under Sharia based, I think one of the key issue that people will look into is that interest rate is unlikely to be the benchmark, because you know that interest rate is totally come from a different space,
yes,
right? So in that context, let's say for your new fund, what type of benchmark are you looking at? Of course, I mean, we have the equity benchmark, but definitely also you have the so-called more towards a conservative side instead of interest rate.
Yes.
You know, what type of benchmark or what indicator will you be looking at?
Well, I think in terms of not only our Sharia fund but even our conventional fund, as you are all aware, in Malaysia there is a wide variety of investment return that an investor can get. But my target for my people is that, for example, if we were to launch anything to the retail market, first of all, we must understand what the retailers are getting. First, they have the choice of FD, which is about 3% to 4% for their investment. And the other one is that if they just keep their money in the EPF, they are now getting about 5.5 to a maximum 6. So when we want to come up with any product, be it conventional or Sharia, what we are trying to do is that, okay, if the long-term market return of Malaysia is 8, then if the equity product that we come up with must be able to actually meet this minimum benchmark, so that in the long run the investors know if they stick with our fund, they can get that kind of return. So this is something that we are working on.
Okay, so of course, I mean, investor always very concerned on the return, but we also know that risk and return is basically twins,
yes,
right? So in that context, how does Kenanga fund managing risk?
Yes, thank you for highlighting the relationship between risk and return. We all know in the investment space that you cannot actually truly eliminate risk. But what we are trying to do here, and I'm happy to say that at Kenanga Investors Berhad, one of my team that is headed by my Director of Investment, Mr. Chen Fan Fai, they have actually an investment philosophy that actually manage the volatility of the funds under their management. Meaning they try to get return based on less volatility. So this is how, you know, the multi-team, multi-style concept can actually offer a different type of investment style to investors. So the way that he manage the two funds that under him, the two unit trust fund, which is the Kenanga Sharia Growth Fund and the Kenanga Growth Fund, actually apply this concept already. That's why you can see that in 2010 Morningstar actually award Kenanga Investor Berhad for this Kenanga Growth Fund as the top equity fund, and we also got recognition on the Kenanga Sharia Growth Fund also.
So, on that basis, right? I mean, it's definitely everybody knows that Kenanga Growth and the Sharia Growth Fund has been performing very well. But on the other hand, other funds are still a little bit lacking behind. I mean, relative to your growth and Sharia Growth Fund. So, do you think that, I mean, at this juncture, all this fund performance, right? The much better performance of the growth fund and compared to the rest, are all these within your expectations? And if not, how you expect, you know, your other funds performance going forward?
Okay, I think apart from the two successful fund that is run by the one team headed by Mr. Chen Fan Fai, I also got about another 9 funds that is run by Mr. Philip Tan, my other director of investment. For this fund, if you notice, of course, if you look at the shorter term, they are actually been impacted during the crisis. But on the longer term, actually since inception, returns and things like that, this fund actually are quite what I call the return are still better than most of their peers. So what we are trying to do here is that we are making sure that this fund will be run according to its objective and be able to give consistent return. Because the retail market here, what we see is that not only we must work in terms of getting the NAV growth, but some investors actually prefer to have dividend return. So this is some of the things that I'm making sure that the investment team know and realize, and this is why we change our name to Kenanga Investors anyway, because we are also investors. We know what the investors want and we want to deliver what the investors want.
Okay, so with the reborn, can you just tell us in a very, of course you have explained everything, so let's say in a very short summary, what is the difference between Kenanga and other fund houses, and why should investor look into Kenanga funds?
Okay, like I said, Kenanga, in summary, we are the first, I think, company that offer a multi-style, multi-team fund management house. That is number one. And number two, we are taking steps to actually making sure that the fund is run according to what the clients want. So this is going to be our company philosophy, which is understanding the client need is paramount to our business. We know that. That's why we changed our name to Kenanga Investors, like I mentioned to you just now. We are investors ourselves. We know what the investor want and we want to deliver it. Okay.
Thank you very much. I hope everyone can have a better picture of Kenanga and start looking and evaluating into Kenanga fund.
Thank you very much.
Thank you for coming.
Okay.